So here is a question. Paradigm on 1st October 2002. Paradigm acquired 75% of Strata's equity share. So there is a parent Paradigm, there is a subsidiary Strata. The parent has acquired 75% stakes in.
Sir, I can't see the
Sir,
question.
we cannot see, sir.
Okay. Just a second. Can you now please confirm? Yes? Yes?
Yes, sir. Yes.
Yeah. Okay, dear. So Paradigm is a parent who has acquired Strata, a subsidiary, and Paradigm has acquired 75% stakes in subsidiary by means of share exchange of 2 shares in Paradigm for every 5 shares acquired in Strata. That means Paradigm is giving 2 shares of their company to acquire 5 shares of Strata. It's a share exchange. Okay, the consideration is paid in share exchange. So for every 5 shares held in Strata, Paradigm is ready to give 2 shares of their company. 2 for 5. Paradigm issued to shareholders of Strata a $100 10% loan note for every 1,000 shares it acquired in Strata. So whatever the 1,000 shares, for every 1,000 shares, they are giving a $100 10% coupon paying loan note. Okay, for every 1,000 shares. To whom? To the shareholders of Strata. So they are paying the consideration in 2 ways. So this is a very good question. This question is not giving you direct consideration paid in cash directly. It is giving you that consideration is paid in 2 ways here. One is in share exchange, one is in loan note form. They did not record any of the purchase consideration, although it does have other 10% loan notes already in issue. You can check in the balance sheet. And Paradigms, the market value of Paradigm shares on the date of acquisition was $2 each. That was the market value. These are the list of balances in the parent and subsidiary. The following information is relevant. At the date of acquisition, Strata produced a draft statement of profit or loss, which showed it had made a net loss after tax of $2 million at that date. So you should understand this loss is already there. It is a at the date of acquisition. That means on October 1st, 2002, the company was acquired. Paradigm acquired Strata, and Strata made a draft statement of P&L, which was already showing a loss of 2 billion. Okay, that's a pre-acquisition loss, accumulated loss of a few years. Paradigm accepted this figure as the basis for calculating pre and post-acquisition split of Strata's profit for the year ended. Also, at the date of acquisition, Paradigm conducted a fair value exercise on Strata's net assets, which were equal to their carrying amounts, but with an exception of plant, which had a fair value of 3 million below its carrying amount. So there is an impairment loss. Plant they were showing higher value for plant, but it is 3 million less. So it's an impairment loss. We need to show this. And this is on the date of acquisition. So you will be taking this also in the goodwill calculation working notes. Plant's remaining life is 3 years. Paradigm's policy is to value NCI at fair value, and they are giving the price of the NCI fair value. Each month since acquisition, Paradigm sales to Strata were consistently 4.6 million. Paradigm had marked up to 15% on cost. Okay. And then you can see that they had some inventory. Strata had 1 month supply of these goods in inventory. Paradigm's normal markup is 40% to the normal customers. But between Paradigm and Strata, 15% was the markup. So, we need to It is unrealized profit, okay, and inventory has to be adjusted. Okay. Financial asset, there is a equity investment, what they have done. You can see that equity investment here. The financial asset equity investments of Paradigm and Strata are carried at their fair values as at 1st April 2002. As at 31st March, these had fair values of 7.5, 7.1 million and 3.9 respectively. So they are saying that whatever the equity investments are shown, whatever the equity investments Paradigm has done and Strata has done, their values have come to this. We need to record them also as gain from the investments. Okay. There was no impairment loss. There were no impairment losses within the group during the year ended 31st March. So I want what they want us to do, prepare a consolidated statement of financial position for Paradigm at 31st March. So I will once again, show you all this and then we'll start the question. Please have a look through this. Retained earning balances, you can see there is a loss of 4,000. Okay. And the acquisition was done. When was the acquisition done? On 1st October 2002. And this is April. So, when the subsidiary closed the balance sheet, that April 1st to see, this is March. This is a summarized financial statement of March. Okay. So that means this is April to March, 1 year. The acquisition was done in the midway. That means it's a acquisition done in October. That is, the year will start from April, May, June, July, August, September, October. After 6 months, the acquisition was done. Okay. So that you should be remembering. So this before this, whatever we have, it is pre-acquisition, and after this, whatever we have, it is post-acquisition. And what they are giving you, they are showing for the year ended. That means this is the profit for the year, for the whole year. Okay. Okay. So there are only four adjustments, but the question is, very good and very quality question. Let's start. First, we know that there is a acquisition happening here, but that is not a full complete acquisition. Paradigm is only acquiring 75% stakes in Strata. This is the group structure. Point number one, first working. Second working, we have to do the goodwill calculation. For goodwill calculation, see, I'm directly showing the options and doing it because it will consume less time. So we have a share exchange happening here, and also the rest of the part is paid in loan notes. Okay. So how we are doing this, let us understand. See, this is the equity of the subsidiary company. Of this 75%, how much is 75%?
15,000.
That is 15,000. Okay. So every 1,000 shares it acquired in Strata. Okay. So let's do the calculation all together, all of you. Yes. So now this is the goodwill calculation. Consideration transferred. Okay. So what is the consideration transferred here? First, so there are 20,000. This is the equity of the subsidiary. In that 70%, 75% is acquired by Paradigm parent. So consideration transferred 20,000 into 75%. And it is, for every 5 shares in subsidiary Strata, every 5 shares in Strata, Paradigm is giving 2 shares of their company. Okay. So for 20,000, see, what is the price of each share? We understand the market value is $2. What is the value of each share? $1 each. So there are 20,000 shares. Okay. 20,000 shares. So we'll multiply this and this. So 20,000 into 2 by 5. What is the market value of each share? $2. Okay. So, and that too, we will take 75% of, not this, 75% of 20,000. So 75% of 20,000 into 2 by 5 into $2. Why we are doing 2 by 5? For every 5 shares in subsidiary, Paradigm is giving 2 shares. For 20,000 shares, how many shares they will give? So we can understand that. So just multiply and tell me the values. It is 12,000 all in all. Okay.
Sir, how did you get that $2?
Sorry.
Uh, 2 by 5 into $2. How did you get that $2?
It's a market value, na? Market value of each share given to you. Market value of Paradigm share at October 1st, 2002 is $2.
Okay.
Yeah, so they are making the payment, right? So whatever the market value is there, that we will be taking. Understood?
Yes, sir.
Hello?
Yes.
Yeah, let's move forward. Next point is they are making 10% loan notes. They are making the payment. So we will understand what is happening here in case of loan notes. Okay. So how you get this 15,000 here? How you get 15,000? Anyone, any clue? See, I will show you. See, Strata's equity shares are 20,000 from the statement of financial position. Each share, each share is of $1. There are 20,000 or two, 20 million shares. If I take three zeros, 75% of this is acquired by the Paradigm. That means 15 million shares they have acquired. Okay. So now and how are they making the payment in case of loan notes? Here they have mentioned. In addition, Paradigm issued to shareholders of Strata a $100 10 million 10% loan note for every 1,000 shares it acquired in Strata. So for every 1,000 shares, they are giving $100 loan note. Okay. For every 1,000 shares, whatever they are acquiring, they are giving $100 loan note. You very clearly know if 75% is acquired by the Paradigm, 25%, okay, that is 5,000 shares will be acquired by NCI or we are held with NCI, correct? So for every 1,000 shares, $100 loan note. For the number of shares, how many shares they are acquiring? The Paradigm is acquiring how many shares? 15 million shares. Am I right? So I'll just make it very neatly for you. 20,000 shares. 75% Paradigm, 25% NCI. So 75% of this is 15,000. So whatever the shares they have acquired, some payment they have done in the form of share exchange, some payment they are doing in the form of loan notes. So we will take this and the other uh, part of the purchase consideration, how they are making the payment, we will account it. Okay. So for that, I'm showing you the working note. So 15 million shares. 15 million is 15. And they are giving how many loan notes? For every 1,000 shares, they are issuing 10% loan note. So for 15 million shares, how many loan notes divided by 1,000? So 15,000 loan notes they will be issuing. Fine. So 15,000 loan notes we will take. What is the value of those 15,000 loan notes? 15,000 into each loan note $100 divided by 1,000 shares. Yes or no? So I will write it clearly. So for 1,000 shares, $100 loan note is issued. For 15,000 shares, that means 15 million, whatever. We have taken now 15,000 loan notes. 1,000 shares, $100 each loan note. So for 15,000 loan notes, three zeros. Yeah, for 15,000, whatever the part of the whatever the shares they have acquired, this money loan notes, value of loan notes. So three zeros omitted, you can check it out here. Three zeros omitted, 1,500. So I'll again tell you in clear way. What they are doing, for every 1,000 shares, they are giving $100 loan note. So we have how many shares? 15 million. So 15 million by $1,000 each loan note, 15,000 loan notes will be issued. What is the value of those loan notes? 15,000 loan note into each loan note. We are converting that loan note quantity into dollars. 15,000 loan notes, each loan note $100. So 1,500,000 dollars. So that is 1,500. Okay. Now, as you know, 75% has gone with the paradigm. So 25% will be given to NCI. Okay, so 25,000, so 5,000 is nothing but 20,000 into 25% into, you already know that NCI is valued at fair value, that is 1.20. So I'll write everything here now clearly. So already working notes done, right? 1,500. 25% into market value of NCI is 1.20. So what is the value you're getting? 6,000. So now for fair value adjustment, we have to make a table and see all the fair value adjustments here. So we will take, already from the question, we have the, uh, equity balances given. So share capital 20,000 at on the date of acquisition and at reporting date also 20,000. Yes, it's given in the question clearly. Okay. Retained earnings, retained earnings. See, this 4,000 is on April 1st. Fine. So what we will see here, 4,000 is the pre-acquisition. Pre-acquisition, and this is the total year's profit. Total years. So retained earnings at acquisition 6,000 and 4,000 on reporting date 10,000. So how did they calculate this? Can anyone tell me? Can anyone tell me? Yashovardhan, can you tell me how did they calculate this? Hello. Can anyone tell me how did they get this? This figures of 6,000 and 4,000. So for this, we need to go into the adjustment. At the date of acquisition, that means when they acquired on October 1st, right? Strata produced a draft statement of profit or loss, and there was a net loss of 2 million. So this is on the date of acquisition, right? It's a pre-acquisition loss. And before itself, they have given some loss, right? That is, the acquisition happened on October 1st. So what I mentioned, acquisition happened on October 1st. So on October 1st, there is a loss of 2,000. But the trial balance is showing what? On April 1st itself. On April 1st itself, there is a accumulated loss of 4,000, which is already there. So this loss and that loss is a pre-acquisition loss, right? So 6,000 is the pre-acquisition loss. So we have it here at acquisition. That means October 1st, 2,000. April 1st on the date of acquisition. So just a second. April 1st already 4,000 loss is there already. And on October 1st again 2,000. So the total loss on October 1st would be 6,000 on the date of acquisition. That is what mentioned. At reporting date, they are saying 4,000 worth of gains. How? So this is the total profit for the year ended. That is from the day from April 1st till March 31st. So we will take 8,000 and divide by 12. 8,000 divided by 12. So what we will do here, as you know, this is the whole year profit. 8,000 is the full year's profit. Okay. In this 8,000, there will be some pre-acquisition and some post-acquisition. Okay. So 8,000, if I divide by 12, I'm getting 666. 666 is monthly profit. Into 6 if I do, because pre-acquisition is 6 months, post-acquisition is 6 months. 4,000, I get the post-acquisition gains. 4,000. Okay. 4,000, I get the post-acquisition gains. Okay. Now, 6,000 we have already seen, and post acquisition. So there was, okay. So this is at acquisition, there is a loss of this much. And that means there has been a gain of total 8,000. But post acquisition gain is how much? 4,000. So a movement of how much should happen from 6,000 to get 4,000 minus 6,000 less 10,000. Then only you will be seeing 4,000. So there is a post acquisition gain of 10,000 in totality. Okay. So 6,000 is the pre acquisition losses. We now taken 8,000. This is the total 1 year's gain. I did it by 12. 6 months is, pre-acquisition period, and post-acquisition period is, 6 months. So I'm getting 4,000. Okay. So I'm getting 4,000. So this is my post-acquisition gain. Okay. But this post-acquisition gain, whatever it is, how much actually Strata's retained earnings was 6,000 at acquisition, 4,000 at reporting date. Okay. On the date when I reported 4,000. So how much is the movement from 6,000 to 4,000? 10,000. Okay. Did you understand this one? Hello. Hello. I'll give you a clarity once again.
Yes, sir, understood.
No, I'll just show you. See, opening retained earnings, 1st April balance is 4,000 loss. Fine. Pre-acquisition loss. that is from April 1st till September 30, 2000, because April they make the statements, and on October 1st the acquisition has happened. So till the acquisition has happened, they on the date, on the first day itself, that is on 30th September, they must have seen that they have incurred a loss of 2000. Okay, so this is pre-acquisition loss from April to September 30. So retained earnings at acquisition is totally 6000. Okay, now post acquisition book movement, that is from October till March, the movement is 10,000. Why? So at reporting date, for the year ended March. Okay, so the total profit they are showing is 8,000 for the whole year. Okay, for the year ended 31st. So this will be having pre-acquisition and post-acquisition both, isn't it? So this will be having pre-acquisition and post-acquisition both. So what will happen? So closing retained earnings at reporting date. So what is your closing retained earnings? This one is like a bit, not going this thing. So I will frame a equation. Okay. So your total profit pre-acquisition, I'll make an equation and show you. Don't worry. Another way of understanding. So pre-acquisition from April till September, let's say X. Okay. That is minus 2000. Okay. Post-acquisition from October till March, let's say Y. This is the total profit for the year. Because total profit is what? Total profit is the whole year's profit. So post-acquisition is October to March. I am taking as Y. Okay, total profit I will not put. It is 8,000 actually given. Okay. So what is your pre-acquisition loss? 2000 minus 2000. Okay. That is from April to September. And before April, it was 4,000. We will leave it as a part. Now, pre-acquisition period, that is 6 months, X plus Y should be equal to 8,000. This is the whole year profit. Correct or wrong? The whole year profit is 8,000. And the minus 4,000 is the accumulated loss, that is on April 2022. That is before previous year losses. So we are only considering the current year right now. Why? Because the current year profit is only 8,000. What is your pre-acquisition loss? Minus 2,000. Plus what is your post-acquisition? Why we need to calculate? 8,000 is the total profit. Now Y is equal to 8,000 plus 2,000. What is your post-acquisition profit? 10,000. Finished. This is also one of the ways to understand. Now the movement is what from acquisition to post-acquisition? The movement is nothing but 4,000, right? Post-acquisition is 10,000. At acquisition is 6,000. If I remove this, I get the reporting date profit also. So we will show that part also. Closing retained earnings 31st March minus 4,000 given. Full year profit 8,000. So 4,000. Okay. Movement from retained earning at acquisition minus 6,000 to closing 4,000, 10,000. which matches with the post acquisition profit also. So if you don't want to go into all this, this is very simple. You can understand between April to September, it is 2000. The total year profit is 8,000. So minus 2000 plus Y 8,000, and Y we have taken as post acquisition profit. So your post acquisition profit will be 10,000. Okay. So post acquisition is taken at acquisition on the date of acquisition, that is April for October 1st. So from post, if I remove the at date acquisition on reporting date, my profit is 4,000. The reporting date is nothing but at the end of the year. Okay, that's what. Retained earning changes. That's what. Now, you already know that the asset which we have we have seen that there's the impairment loss of 3,000. Asset value has decreased by 3,000. Okay. See, the adjustment is here. Also, at the date of acquisition, Paradigm conducted a fair value exercise on Strata's net assets, which were equal to their carrying amounts, with exception of an item of plant which had a fair